Hey everyone, welcome to Tax and Accounting Tips, short videos designed to get you a bigger tax refund, protect you from loss, or just give you peace of mind that if the IRS comes knocking at your door, you've done things right. As many of you know, when we prepare your tax return and you end up owing a lot, you get a direct phone call from me or at least one of our associates breaking the news, the bad news to you, and to tell you or explain to you what caused the bad situation. There's a zillion reasons why that can happen, but what I found is that one of the most common reasons is the client didn't realize that his or her Social Security benefits were going to get taxed. But you're saying Social Security is a tax that I paid in during my working life, and if it's a tax, how can you tax the benefit of the tax that I paid in, or how can you tax a tax, right? Well, they can, and they do. I guess the Social Security payments that you've made during your lifetime out of your paychecks was really thought of as more of a pension contribution than a tax. But when you make a pension contribution, you normally get to deduct that from your gross pay, right? Or if your employer contributed for you, that income is exempt. Either way, there's a tax benefit there. But that's not the case when you contribute to Social Security out of your paycheck. With Social Security, the money going in is treated more like a tax, not tax deductible from your pay. And it's a flat tax to boot, 6.2%. But on the way out, when you're drawing on the Social Security benefits, you may get taxed on it. So in that way, it's treated more like a pension. The tax code. They get it both ways, very unfair. But there is one good thing about Social Security benefits that's different from a pension. Depending on your situation, the entire amount of the Social Security benefits that you draw out might not get taxed. Here's the deal. It's based on the rest of your income, the income aside from the Social Security benefits themselves. So if you look at the other income that you make, pension, capital gain, dividends, and all this other income is under about $18,000, then usually you get taxed on 0% as far as your Social Security is concerned. I say usually because it's actually a formula that determines it, and that formula is based on the amount of your other income and the amount of your Social Security benefits. I'm not going to get into the details of that formula, but just know it's a real possibility that 50 to 85% of your Social Security benefits get taxed as your other income gets higher and higher. It never goes above 85% no matter how much you make. Here's an example of what happens. Say your other income, aside from the Social Security itself, is $15,000, and both spouses make, say, $15,000 in Social Security benefits. So they get $30,000 in Social Security benefits plus $15,000 in other income, so they make $45,000. Guess what? Their Social Security benefits get taxed at 0%. Heck, they don't even have to file. With just $15,000 of that other income taxable, that puts them below the poverty level as far as taxes are concerned. Graduated income tax rate, right? Zero tax due. So everything is wonderful, but then they want to buy that nice shiny new boat, and so they pull $80,000 out of their IRA. So now they know that they're going to get taxed on their $80,000, but they're smart. They withhold 12% from their taxes on the $85,000 distribution, which is $9,600, and take the net check of $70,400. So they think they got it covered. But when we present their tax return to them, they're blindsided by getting taxed on 85% of the $30,000 Social Security benefits, which they were not used to paying tax on. What happened? Well, the other income aside from the Social Security itself, shot way up above the $18,000 because of the IRA distribution. That triggered the 85% taxability of the Social Security benefits. This could also happen when someone drawing on Social Security sells an old stock, which has a low cost basis, and they're thinking they're just going to get taxed on the capital gain, 15% capital gains. But they forgot that the capital gains is part of that other income, which causes their Social Security benefits to get taxed. So my message to you today is beware and don't get blindsided by tax on your Social Security benefits. Thanks and have a great day. Give us a referral.